Well, good morning, good afternoon, and of course, good evening, traders from across the globe. It's Thursday night. Thank you for tuning in to my 2609th edition of Short-Term Trading Live with Oscar. And this video is coming at you on a Thursday night for trading Friday, 7/21/2003, July 21st. Traders, you know this is a risky game. The OMNI has been just killing it lately. Thank you so much, OMNI. But every now and then we have a losing day because risk is part of this game, and losing is an integral component to trading. You can't have winners without some losers, right? So, every now and then we got to let the other guys win, right? But it's really risky, so put your stops in and put them in first. Now, how about I get to take a bow for what's going on in this last week or two? Jesus, this OMNI is just really navigating us correctly. On Wednesday night for Thursday, the OMNI said, stop buying. Just cut it out, Oscar. You guys have made money all week. Stop buying. Let the market tell you what it wants to do next. And Thursday, the market started to turn. Now, Thursday night for Friday, the OMNI wants me to start off selling short. Get short, let it drop, and then get out of the market's way. Sidestep once flat. Why? Because no matter what you think you're seeing right now, we're in a big booming bull market. And if you get short and it drops and you take profit in a bull market, you get the hell out. You know what I'm saying? Bull market means bull market. Now, of course, the Fed is going to raise rates next week, or the charts are telling us that the Fed is going to raise rates next week. And that should give some fund managers and some other traders out there a chance to get in, because if the Fed raises rates, the market drops a little, and here's what's going to happen. I promise you. Number 2 on the board. You will need earplugs. I promise you're going to need earplugs, because every bear is going to come out. High five, I told you so. I knew this was happening. Here's the big shooter. That shoe that's going to drop. This is all you're going to hear for the next couple of days, right? Because the bears who've been on the wrong side, they're going to have to find some excuse to tell their traders that they're trading wrong for. That, hey, I knew I had it right, you just had to wait. And this is going to be that moment. Why? Because the Fed's going to raise rates next week. The market just raced up and raced up and raced up right to Friday or Thursday afternoon, then started to drop. The Fed's raising rates next week, most likely. Doesn't that make sense, kids? Of course it does. What won't make sense is if you get nervous and think that the top is in and now the market's going to crash just because we're going to have a down day. So don't listen. If the charts tell us that we are absolutely going to change direction, charts rule, not imaginations. And I promise you, there's a lot of traders with imagination trades out there. Instead of trading what they see, they trade what they read and what they think that means in their brains, and they construe and they come out with, or extrapolate, whatever you want to call it. They come out and go, okay, I've extrapolated this because Biden said this and the market did that yesterday, and I don't like Trump and my mother's ugly, or whatever the hell's in their head. They use that for trading. And I promise you, most traders that do that don't win. What you need to use for trading are the charts. OMNI has been proving this day after day to us. Okay, so take my word for it. For the next few days, try not to listen to the bears. If the charts change and turn bearish, I promise I'll come out and tell you that. Number 3 on the board. Is the U.S. dollar speaking? Well, the dollar started to take off. I'll show you a chart in a few moments. The dollar rallying right before the Fed may or may not raise rates tells us the Fed likely will be raising rates. Dollars rallying, stock markets dropping. Those in the know already know, and the markets are reacting. So they're showing us, by the way we're seeing them right now, snapshot picture. The charts are telling us the Fed will be raising rates by at least a quarter point come this week. Number 4 on the board, OMNI Camp on the road. Next week, I am out of here like Vladimir and going to Rockland County. Now listen, I'm planning on doing maybe something on the Thursday after OMNI Camp, but I would like to meet some of my OMNIacs that are in the tri-state area, New York, New Jersey, Connecticut. I will have a few extra days in August. I'm going to do OMNI Camp the last day of July, then August 1st and 2nd. On August 3rd, I am planning on having a little gathering up in Rockland. If you are anywhere near Rockland County, New York, and are an OMNIac and would like to meet me and come in for a hangout session, maybe we'll do some studying together, make sure you contact me. Come to the site, livewithoscar.com, fill out an application. Let me know you just want to meet me up there. It's not for OmniCamp. It's just to hang out and meet with me. You can call me, 702-629-4755. You can email me. I'll make it an easy email. Well, I don't know if this is easy. It's futuresanalysts@gmail.com. Send me an email. Let me know if you want to get together. If enough of you want to get together, I'll plan something cool for Thursday of August. Now, I only have this week to hear from you. After that, you're out. So make sure you contact me. Traders, number one on the board, Omni waved us off from buying on Thursday. It was right. Omni now wants us to take a short Thursday afternoon into Friday and then get the hell out of the market's way once we're flat. If we can get filled, we'll do that. Remember, don't listen to people's imaginations. Don't listen to any of the stuff you might hear out there. Follow the charts. Put your earplugs in the next couple of days. If the bears start screaming how right they were, it's only gone up from 3,800, the S&P, to 4,600. All right, it's obviously a bear market, right? Obviously. And then the dollar moving the way it's moving is probably telling us that the Fed will be raising rates. All right, traders, let's go look at some charts now because that's where all of this comes from. That's what's most important. One last thing I will tell you, Omni has been just killing markets. These recommendations have been fantastic. In June, sending out my recommendations and calculating as if you're only trading one lot only with these trade recommendations. In June, you made $9,900 trading the Omni. In May, you made $5,200 trading the Omni. And I believe we are up, I don't know, I don't want to say how much yet, but we're up a lot this month. I can tell because my account's been going up all month, and I'm sure that's happening to you. Now, this is my platinum recommendation service. When I am going to get in the markets, before I ever get in, you guys get notified so you can get in with me. When I'm getting out, I let you know so you can get out with me. And these are all Omni trades. I don't make these up. It's Oscar's Market Navigational Indicator. I put out daily recommendations every day. Live, real-time recommendations called the Platinum Service. I don't know why you people haven't joined. It's like $4.60 a day. If you don't think I'm worth being in your corner for $4.60 a day, you probably aren't watching this video right now. So listen, join the service while Omni is banging away. Jump in, you know what I mean? When it's printing money, this is when you should be part of the service. All right, traders, that's about it. With no further ado, let's go look at some charts. Traders, E-mini S&P daily bar. You have seen this in every video for I don't know how far back now because it's really been showing us what comes next. If you remember, it started with the inverted head and shoulders, right? Left shoulder, head, right shoulder. I've pointed that out to you for a long time, inverted head and shoulders. That turned into a series of a low, a high, a higher low, a higher high. So this one's higher than that one. This low is higher than that low, right? It drops down again to a higher low, rallies up to a higher high. So series of higher highs and higher lows means that the market is in a bull market run, right? We're in a bull market here. So we know that. We've had higher highs and higher lows. Right here, when it gets up to the top of the trend line, it seems to have a little breather. Almost to the top of the trend line, has a little breather. Hit the trend line right before the Fed's probably going to raise rates. What a perfect spot to take a breather. What a perfect time. I mean, how perfect of analysis is that? For the market to run right up, hit that trend line, bearish news comes out, well, slightly bearish, it looks like the Fed's going to raise rates, and right there it starts to turn down, and the Omni gets bearish at the same time. What more could we ask for, right? Go Omni, go analysis. So far, so good. Now, I will tell you, I am only expecting a pullback. I think the Fed will raise rates, and that will allow some people in. It'll drop a little, maybe even all the way to here. Who knows? But we are in a bull market, and I don't think we'll get past that low, right? Because we're doing higher lows. So we probably will never get past that low. We'll drop somewhere. It'll find its legs, and back up it should go. But we're day traders, so we'll take it one day at a time. NASDAQ. S&P hit that spot, decided to take a breather. NASDAQ went right with it. But look at all the support waiting for NASDAQ underneath. That same support that worked here and started back here. Well, we're getting to the meat of it. Maybe tomorrow, you never know. I say there's a lot of support there, kids. Let's hope it doesn't get there until Fed Day. That would be a great spot, right? Let's see what happens one day at a time. Russell 2000. The Russell fell out of the channel. Look, boom, out of the channel. Here's today's trade. And here's the end of the day. Russell fell out of the channel. So, being that Russell's out of the channel and everything else I just showed you looks like it wants to have a down day, we will sell a rally first and see what happens in E-mini S&P if we get filled. If you're really, really worried, this is your weekly Dow Jones Industrial Average chart, the weekly. So every one of these bars represents a full week's worth of trading. This is all-time forever highs, the highest the market has ever traded. And this is exactly top day, right till the close today, what the Dow Jones looks like. Does that look scary? You know what I mean? If that looks scary to you, you are not paying attention. Don't get nervous yet. And then we've got this. Now, here's why. You saw that the charts for the indices are starting to move lower and the dollar is starting to move higher as we're approaching a Fed meeting. If the Fed's going to raise rates, that means you need dollars to purchase these new high rates, and lots of countries and lots of companies will. So the dollar racing up right now is kind of telling me that if the stock market's taking a little breather and the dollar's running up, the Fed will be raising rates by probably a quarter point. I don't think they would do more, but the charts are telling us that at this moment in time. We will take this day by day, and of course by Tuesday afternoon, Wednesday, we will have a full handle on what we expect the Fed to do. Traders, thank you for tuning in. Remember to keep your emotions out of this game. Never make emotional decisions. The best thing I can do is to help you with not making emotional decisions is to tell you to say this to yourselves over and over again. Are you with me? 1, 2, 3. Stops are in. Emotions are out. Thank you so much for tuning in. I will see you all at livewithoscar.com.